Hey all, it's Aimee Derylo, Ask Aimee for Downers Grove and DuPage County Real Estate. For this week's Ask Aimee, I'm going to depart just a little bit from my typical format because I'd like to bring to you one of our industry experts, David Childers from Keeping Current Matters, which really handles a lot of the real estate marketing analytics and consolidating all of that information for agents like me. And they do this kind of on a national level. And then I try to bring you a perspective from a local level. I would love to bring to you just a little bit from a recent presentation that David did on, is it really an okay time to buy? And it's going to cover really what it looks like from a pricing perspective, from an interest rate perspective, and understanding inventory and how all those relate. Now, it's not super lengthy, but I do think it's important. Listen. So let me know if you have any questions. Reach out, ask Aimee. And here you go. Here's David.
But let's kind of shift our attention to this should I buy a home right now question. I think that is the biggest question. No doubt rising interest rates have impacted affordability across the country. But listen, that's not the biggest issue. The biggest issue is nobody wants to buy something that, 6 months, 12 months down the road is worth less. Okay, so I want to talk to you about what experts are saying about that. I want to talk about deceleration in the market and really give you the why behind price appreciation, what experts see. This is a look at the home price forecast for 2022, going across everybody that we look at: Fannie, Freddie, CoreLogic, Home Price Expectation Survey, all the ones listed here, average about 8.5% residential price appreciation in this country this year. Now, many saying right now prices are going to fall, and we're seeing a lot of price reductions and price changes on things that are on the market. Here's a question: can you have a price reduction and still see home price appreciation? The quick answer is yes, you can. As pricing has sort of run up over the last couple of years, a lot of people in the market, a lot of sellers aspirationally pricing their homes and having to say, we've got it overpriced right now, and having to come back off that. But the net of what forecasters are seeing for this year is price appreciation. The root issue of what drives house prices is almost always supply and demand. Agree with that. It goes on to say, now interest rates affect that. When interest rates go up, guess what? Fewer buyers. The demand goes down, thus prices are going to soften or not be as cray-cray, that's his word there, as they have been. And that's what we're seeing right now. That is an explanation of the market right now, right? Price is always going to be determined in any market, not just real estate, anything you're selling, by supply and demand. And what happens in our business is interest rate goes up, there are fewer buyers. It starts to moderate the market. If anything, over the last couple of years, we've said, we need this frenzy to slow down. We need this price appreciation to slow down. It's not sustainable. And so that's what we're seeing, and that is a good thing. Of the single family housing units brought to market going all the way back to the 70s, the blue bars represent the years, again, going back to the 70s up until the housing crisis of 2008. And what happened there, builders were very, very heavily hit because they had speculated on lots and builds with inflated demand because of, certainly qualification in the mortgage market that wasn't sustainable. So somebody didn't have to qualify for a mortgage. They could go and buy a home. And what happened in 2008 is we said this can't happen anymore, and it became a lot harder to go out and qualify for a mortgage. Many of us are very familiar with that in the market. And so builders, got out of the market. Builders weren't bringing the units to market because we were oversupplied. And so for 14 straight years, we've been below the 50-year average in this country on new builds coming to market. So that's the supply side. The reason the frenzy in the market happened is we simply do not have the number of homes on the market for those that want to buy them. Second reason, let's look at the demand side. Demand is being driven right now by millennials. The blue bars right in this graphic are the millennial generation that are moving through their peak home buying years. If you look at NAR's study of buyers and sellers in this country, the overwhelming majority of buyers fit in this category right here, the peak home buying years that we can see statistically when people go out and buy a home. 81% last year first-time home buyers were millennials, and 43% of all buyers were millennials. Take what we have, low supply. We haven't, brought the builds to market for the past 14 years. This tremendous amount of demand coming through, driven by millennials, and there you have it. You have price appreciation. So as you start to talk about why forecasters are saying homes are going to continue to appreciate, it's because of this. It's because of demand issue and a supply issue driving and keeping that upward pressure on prices. Given that, should you do that? Well, again, let's go back. We understand our supply and demand conversation. Let's look at what the home price expectation survey says. They say between here and 2026, see about 9% appreciation in the market this year. Remember, we said the average was 8.5 from all the forecasters, so that fits in line there. And then 2023 through 2026, what I'm going to call more normalized appreciation. Normal appreciation in this country has been about 3.8%, going all the way back for the last 20 years, and we see 4.19, 3.12, and so on for the next few years, moderating the market. Well, if you were to go out and buy an average priced home this year, that in gained equity over the next 5 years is just over $100,000.